Hi everyone, my name is Elizabeth Blossfield. I'm the Deputy Editor for Carrier Management.
I'm Ezra Amacher, the Midwest and South Central Editor at Insurance Journal.
And I'm Alan Lehman, a content editor at Insurance Journal. And we are all here today joined to share with you some of the top news that was shared on the Insurance Journal website this past year.
Yeah, it's exciting. I can't believe we're heading into 2026 already, but it's been a big year for Insurance Journal, and we've covered a lot of big news stories, so I'm excited to dive into it. To start off, we have a story about some acquisition news. Brown & Brown made big news in 2025, announcing in June a roughly $9.8 billion agreement to acquire Accession Risk Management, the parent company of Risk Strategies and 180 Intermediaries. The move came as consolidation has continued across the insurance brokerage industry, and industry experts say the acquisition signals renewed momentum for large-scale deals, following several headline-grabbing mergers by competitors this year, even as overall merger activity has slowed. Thanks to our colleague Chad Hemingway for reporting on the acquisition, and that's a pretty big deal to start off this wrap-up for 2025.
Yeah, definitely, Elizabeth. It seemed that last year was a huge year for broker M&A. Just yesterday, IJ had a story up about 7 announced mega deals of $1 billion or more that were announced in the last 6 months alone. That was some reporting that we had from a report that PwC put out about how brokers are pursuing these acquisitions to offset softening premium rates and expand specialty and regional reach. So definitely something to keep watching moving forward. So our next story on this list was a huge one that began breaking at the very beginning of the year in January, and whose effects continue to dominate headlines for much of the winter and early spring. In January, our Don Jergler reported that the wind-driven wildfires ravaging Southern California would likely lead to large economic and insured losses. That proved to be true. According to Swiss Re, those wildfires accounted for an estimated $40 billion of insured losses, and that made them the highest ever insured loss from a wildfire event. In the aftermath, we learned that the Eaton and Palisades fires destroyed more than 16,000 structures and caused 31 confirmed deaths. Our reporting in the months that followed focused on the underwriting losses stemming from the fires, lawsuits connected to the event, and the viability of the state's insurer of last resort, the California Fair Plan. In September, less than 10% of the homes that were destroyed had permits to rebuild.
Yeah, as you said, Alan, that story has had some major ramifications, both in the insurance industry and in the state of California. And we're still trying to process right now who is going to be ultimately liable for starting that wildfire. Turning our attention a little bit towards the Southeast, where our great colleague Will Rabb reported on that Georgia Governor Brian Kemp signed a major tort reform measure in March after legislation narrowly passed both the House and Senate following an intense lobbying campaign and political threats. The bill sought to curb frivolous lawsuits and limit large jury awards by implementing stricter evidence requirements for premises liability, decoupling trials for fault and damages, and allowing jurors to see insurance-covered medical costs. Provisions supporters claim will lower insurance rates and protect businesses. However, the legislation faced fierce opposition from Democrats and victims advocates who argued that the new legal hurdles will effectively block survivors of sexual abuse and violence from seeking justice against negligent property owners.
Yeah, definitely something interesting to keep an eye on into next year. And our colleague Will Rapp has been doing some great reporting. We'll hear a little bit more about his reporting in Florida in a bit. But just going back to the climate disasters, I know that Alan spoke about wildfires a little bit earlier. And we're going to talk about catastrophic flash flooding as well that hit central Texas this summer after torrential rain caused the Guadalupe River to rise more than 25 feet in under an hour. The surge swept through camps and RV parks filled with 4th of July visitors, including an all-girls summer camp that suffered devastating losses. This has all led state and federal officials to face questions about preparedness, warning systems, and the accuracy of weather forecasts leading up to the disaster. The National Weather Service says alerts and flood warnings were issued in advance, but some residents reported receiving them late or not at all. Experts say the rainfall amounts were consistent with a rare 1,000-year event and point to climate change as a factor increasing the severity and unpredictability of extreme weather, which has been a growing challenge for communities all across Texas, one of the hardest hit states for weather-related disasters. Our hearts, of course, go out to Texas and all of the victims of natural disasters this year and climate change, and its effects are definitely something we'll be keeping an eye on at Insurance Journal.
Yeah, Elizabeth, something that stuck with me from that story, I believe it was from 1980 to 2024, Texas had more than 190 weather disasters that cost $1 billion or more. And that's the highest tally of any state in the country. So just crazy to think about how that state's been really ravaged in the past, just few decades now.
Yeah, they've been hit pretty hard.
Moving on to our number 5 story, third-party litigation funding was also a big topic in 2025. In October, our national editor, Chad Hemingway, published a piece sharing how Uber has filed racketeer-influenced and corrupt organizations lawsuits in New York, Florida, California, and Pennsylvania against lawyers and medical providers it thinks are committing fraud and driving up costs. Adam Blinick, Senior Director of Public Policy and Communications for Uber, said that other corporations had reached out to ask advice on methodologies and building cases. Chad's reporting found that the ability to share information between many kinds of companies and players in litigation can be cumbersome, and that there is a lot more that can be done on information sharing than is currently being done. Plaintiffs' lawyers, meanwhile, are already highly coordinated, sharing theories, recruiting firms into new mass torts, and investing heavily in political campaigns. In the meantime, third-party litigation funding has become big business.
Yeah, as we all know, combating third-party litigation funding is a huge source of interest for the insurance industry, and something that we're likely going to be continuing to report on here in the coming months and even coming years, most likely. Turning our attention to New York State, where in January, our colleague Andrew Simpson reported that a coalition called Citizens for Affordable Rates, backed by a multi-million-dollar funding commitment from Uber, launched a campaign to combat skyrocketing insurance premiums that currently sit nearly 40% above the national average there in New York. Comprised of various community and immigrant advocacy organizations, the group aims to address an affordability crisis they claim is fueled by fraudulent claims, excessive litigation, and the financial instability of major insurers like American Transit Insurance Company. The coalition's immediate goals include mobilizing consumers and advocating for legislative reforms, such as reducing the mandatory personal injury protection limits for New York City rideshare drivers to match the rest of the state, a move intended to lower costs for both small businesses and low-income families.
Yeah, those challenges in the rideshare industry in New York in particular have been going on for quite a while. So that was a great report by our colleague Andrew Simpson, and it'll definitely be interesting to see what happens going into next year. And we talked about Georgia earlier. Now we're going to move even further south to Florida. Florida's insurance market is actually showing signs of recovery, as Citizens Property Insurance Corporation is no longer the state's largest homeowners insurer, a role it held during years of market turmoil. Citizens says its policy count has fallen to about 560,000, down 40% from its peak in 2023, as more homeowners move back to private insurers. The shift follows recent legislative reforms aimed at curbing litigation costs and has helped stabilize the market, with private carriers expanding and even announcing rate cuts. Universal Property and Casualty and State Farm Florida now rank as the state's largest property insurers. In another significant reversal, Citizens is also now seeking a rare homeowners rate decrease, proposing an average 2.6% cut starting in 2026. Officials say the change signals that Citizens is returning to its original role as an insurer of last resort, although commercial policyholders may still face increases. Regulators are expected to review the proposed rate cut early next year, marking another milestone in Florida's steadily improving insurance landscape. So actually some hope on the horizon for the new year in Florida.
Yeah, absolutely. I mean, when you hear those numbers, it's almost hard to believe that just a few years ago, Citizens had like 1.4 million policies in the state of Florida. So yeah, it seems that it actually is, turning into that backstop of last resort that it was intended to be.
Yeah, and it's been a long journey to get there. So I'm sure Floridians, insurance consumers at least, are breathing a little bit of a sigh of relief.
Well, our next story is one that also centers around a backstop. In November, Jamaica's catastrophe bond triggered because of the fallout from Hurricane Melissa. That $150 million cat bond, which was arranged by the World Bank, is designed as the ultimate backstop to help provide funds to pay for only the most extreme weather events. Bloomberg reported that the last time a weather-related cat bond paid out in full was in connection with Hurricane Ian in 2022, when several bonds suffered 100% loss in principal, according to Artemis, a data provider specialized in insurance-linked securities. The structure of Jamaica's cat bond, combined with the intensity of Hurricane Melissa, paved the way for the largest and fastest disaster relief payout in the island's history. David Panton, chairman of Atlanta-based Panton Equity Partners and a former Jamaican senator, said in an emailed comment. Jamaica, which the World Bank estimates is the third most exposed country to natural catastrophes, has built up several layers of disaster risk financing, including prearranged credits and parametric insurance. Its cat bond sits at the top of the insurance tower as protection against extreme events.
Yeah, as you pointed out there, we hadn't seen a cap on get paid out to its full extent since 2022, which speaks to really the severity of what occurred in Jamaica. And I know that we're all thinking of people down there, and that we hope for a fast and smooth recovery down in Jamaica. Now, turning attention a little bit to a story I wrote actually back in October. Acrisure, the third largest independent property casualty agency in the U.S., announced that it will lay off 400 accounting employees starting early 2026 as it transitions toward a tech-enabled financial services platform. The Grand Rapids-based broker cited advancements in technology and artificial intelligence as the primary drivers for the decision, marking a significant step in a long-term strategy that included a $400 million AI acquisition in 2020 and $2.1 billion in recent funding to accelerate digital innovation. While the company expressed regret over the impact on its workforce, leadership maintained that these cuts are necessary to remain competitive and meet evolving client expectations through automated systems.
Yeah, thanks for your great reporting on that, Ezra. I always enjoy reading your articles because they're so thorough. And this points to a big issue in the insurance industry right now with talent, and especially in the age of AI. So it'll be interesting to see what continues to happen. And we have another talent story coming up next, although a little bit of a different angle. Insurance Journal reported in April that global insurance broker Marsh filed a federal lawsuit against competitor Aon and a former senior executive, alleging a coordinated raid on Marsh's construction surety business. The suit claimed that a longtime Marsh team leader, Robert McDonough, orchestrated the rapid resignation of 20 employees in less than an hour before moving to Aon, taking confidential information, clients, and key staff with him. Marsh said the alleged allegations caused millions of dollars in lost revenue and damaged client relationships and its reputation. According to the complaint, McDonough breached non-solicitation and confidentiality agreements by working with Aon to recruit employees and shift clients using Marsh's proprietary data. The case adds to ongoing scrutiny around aggressive talent recruitment practices within the highly competitive insurance brokerage industry. And thanks to our colleague Andrew Simpson for his reporting on that. And it's definitely insurance talent acquisition is a space I'll be continuing to watch in 2026 because there's a difficult job market, the use of AI, and ongoing talent gaps in the industry. So it's something that I think will be an ongoing challenge.
Yeah, it's really interesting, Elizabeth. I mean, we started this list talking a lot about broker M&A, which we did report a lot about. And we also reported a lot about these sort of inter-broker lawsuits, the broker on broker lawsuits throughout the year. So certainly two avenues that we'll be focusing coverage on moving forward. Moving on, cybersecurity headlines dominated the IJ website in late spring when two major insurance companies dealt with cybersecurity issues. Erie Insurance's computer systems went down after the insurer's information security team detected unusual activity on June 7th, and Philadelphia insurance companies dealt with a network outage after disconnected systems to contain a threat from suspicious activity detected on June 9th. Aflac was also hit by a cybercrime attack in June. Then in July, IJ reported that the largely decentralized hacking group known as Scattered Spider had switched its focus from retailers to insurance companies, according to Google Threat Intelligence Group. It's interesting to note that even later in the summer, a portfolio claims analysis shared by Resilience, which is a cyber risk solutions company, showed the year-over-year average cost of individual ransomware attacks rose by 17% in the first half of 2025.
Yeah, this is an ongoing issue, as Elizabeth especially reports on with her Insurance Cyber podcast. Now we're seeing insurers themselves be the target of some of these cyber ransom attacks, and that's certainly driving a concern across the industry. Turning to a story that a colleague here, Alan, wrote back in March, AM Best analyst warned that the planned imposition of U.S. tariffs on imports from Canada, Mexico, and China will negatively impact the insurance industry by driving up loss costs in the homeowners and auto lines of business. The tariffs were expected to disrupt established supply chains, leading to higher prices for construction materials like lumber and advanced automotive electronics, which will increase the cost of claims and potentially reverse the stabilizing trend in personal auto insurance. Furthermore, the rating agency cautioned that global economic uncertainty and retaliatory measures could trigger trade credit and political risk insurance claims, while industry groups like the APCIA emphasize that these broad economic barriers may ultimately hurt consumers and slow recovery efforts for those rebuilding after natural disasters.
Yeah, thanks, Ezra. Lots going on this year with economic instability, climate disasters, M&A, talent acquisition, and I'm sure all of those trends in insurance will continue into next year. So it'll be interesting for the Insurance Journal team to pay attention to how that all evolves. And I think this has been a really great wrap up. It's always great to connect with you, Ezra and Alan. And it's always interesting to look back on some of our top stories of the year and the great work that our team is doing.
Yeah, I agree, Elizabeth. I love being here with you and Ezra to do these wrap-ups. I think it's a lot of fun and gives us just a great chance to highlight, some of the work that we and our colleagues do all throughout the year. Now, we do want to highlight some of the other things that have been happening at Wells Media Group this year. And so one of the big things that came back for its second year in 2025 was the Risky Future Summit, which is a virtual event that's catered to risk management professionals and insurance professionals alike. And we are going to send it over to an overview or a promo trailer here in a second, but we encourage everybody who's watching to also sign up for the 2026 event, which will take place in November.
The second annual Risky Future Summit is available on demand. The go-to virtual event built for today's risk managers. This virtual summit will include expert discussion on transportation, commercial auto, climate change, cybersecurity, nuclear verdicts, and more. Unlock your potential with lessons from the best in the business. This exclusive event is hosted by Elizabeth Blossfield, Chad Hemingway, Andrea Wells, Alan Lehman, and Ezra Amaker. Visit riskyfuture.com to view the on-demand videos.
We definitely want to check out the Risky Future Summit there, and we encourage you to register for the upcoming summit for sure. And we also want to promote Elizabeth's Between the Lines web series. On this past episode, Elizabeth talked to a couple guests. Let's check out a promo for that episode.
Don't miss this new episode of Between the Lines. AI on the front lines of disaster risk management, on demand now. As climate change intensifies natural disaster frequency and severity, insurers are turning to AI technologies to proactively manage risk, ensure regulatory compliance, and fulfill their duty to policyholders and communities. You'll hear expert advice from Phil Korecki, Chief Technology Officer at Insono, Kristen Noonery, Chief Executive Officer at MyCOI, and Michael Ballarezo, Founder and CEO of Adjusto. Watch the on-demand video at carriermanagement.com/research.
Yeah, it's always great to have important conversations about trends that are going on in the insurance industry, and those experts in particular were great to talk to for that episode. And finally, we wanted to highlight our annual virtual InsurTech Summit, which we held this year. The theme was Unlocking the Future of Insurance. We had some great panel discussions, a lot of expert guests, and it's all available to view on demand through the InsurTech Summit website. And we encourage everyone to sign up for 2026 InsurTech Summit, which will take place next year in the spring, and sign up is available now. So let's take a look at this promo.
The InsurTech Summit 2026. Don't miss out. Go to the insuretechsummit.com to sign up or apply to be a speaker for the summit before seats fill up. Watch this sneak peek from last year's summit.
The InsurTech Summit 2025, presented by Carrier Management, available on demand now. Join industry leaders as we explore overcoming legacy systems, integrating artificial intelligence, legal pitfalls, and insurer-insurtech collaboration. Hosted by Elizabeth Blossfield, Deputy Editor of Carrier Management, Andrea Wells, Vice President of Content at Insurance Journal, and Alan Lehman, Content Editor of Carrier Management. A special thank you to our key takeaway sponsor, Snowflake. And a big thank you to our sponsors, Leah and Agent Tech.
Well, we have a great team of colleagues here at Wells Media, and as the year 2025 comes to a close and we head into a new year, we just wanted to thank our team for all of their great work. So we have a wonderful team of editors at Insurance Journal, Claims Journal, and Carrier Management who are bringing great coverage to our readers and are such a pleasure to work with. So we wanted to say thank you, first of all, to all of our editors here at Wells Media.
Definitely, and we also want to thank the entire Wells Media team, everyone behind the scenes, everyone who's a part of this operation, who helps Wells Media create the best insurance news in the landscape. So thank you all.
Yeah. I think we should give special shout outs to two groups of people. The first being our new media team, Ashley Cochran and Ashley Waldrop, who are behind the scenes on all these videos and helping us bring them to life. And helping us with the conferences and doing so much organizing and so much work that never really gets seen, but really makes all this stuff possible. So a huge shout out to them. And also a big shout out to our leadership team of Josh Carlson, Julie Tinney, and Andrea Wells, who have been guiding us and sort of encouraging us to take on these new projects. So big shout out to everybody involved there.
Yeah, absolutely. And finally, we couldn't do any of this without our audience. So thank you so much to all of our readers, viewers, and listeners to our videos and podcasts. You've been such a huge source of support for our whole team as well. And we're looking forward to bringing you a lot of great content in the new year. So happy New Year, everybody, and thanks for tuning in.